with crypto, and I'll go through my crypto journey in a bit, but the crypto question is, and I asked Peter Schiff this, is the world going to be more digital tomorrow than it is today? If the answer is that, then the probabilistic outcome is this space is going to continue to see adoption. Right, it's pretty simple.
The SquiggleDAO podcast is brought to you by Nifty. If you need liquidity, instead of selling your NFT, you can get a loan. Nifty is the most battle-tested and secure NFT lending protocol. You can borrow ETH, USDC, or DAI from lenders using your NFTs as collateral in a trustless peer-to-peer fashion. By being peer-to-peer, you can get better terms on specific or rare NFTs. And there is no liquidation risk. As long as you repay the loan before maturity, your NFT is yours. Head over to niftyfi.com and access the app today.
Welcome to the SquiggleDAO podcast. My name is Jared, and online you can find me on Twitter at Jared_pause. I'm the founder of the 8NAP Digital Asset Fund and the Art Forward platform, 8NAP Art.
And I'm Nifty. I lead finance, acquisitions, and NFT DeFi for the DAO, and I'm a huge fan of Squiggles.
Our guest today is Raoul Pal. Raoul is the founder of the premier institutional service Global Macro Investors, co-founder of the content platform RealVision, and the Exponential Age Asset Management, a fund of funds that invest in crypto hedge funds. Raul's been very generous with publicly sharing his knowledge, including public positions with Solana, Metcalfe's law for crypto adoption, liquidity being a major driver in today's markets, and most recently, one of my favorite sayings is DFTU, or very clearly stated, don't fuck this up. I particularly loved how he's taken us along for his ride within the crypto space in his series titled Raoul Pal, the Journeyman. If you haven't seen it, I'm sure it's available on any sort of streaming platform or even YouTube, where guests have included the likes of Web3 art greats like Beeple and Sam Spratt. Previously, Raoul was in finance for over 35 years, working in institutions like Natwest, Goldman, and also in hedge fund industry, servicing guests like really rock star greats like Paul Tudor Jones, Stan Druckenmiller, and Louis Bacon. Raoul has influenced countless individuals within the investing space and through his content and aspirations for content creation with RealVision. It's been extremely admirable. If you can't tell, definitely a fanboy of everything you're producing. And as mentioned off camera to Raoul and RealVision have been a catalyst for much of my initiation into Web3, and I know countless others. So today, it's a true privilege to have Raoul on the pod. So welcome, Raoul.
Thank you. That was a very generous intro. I didn't deserve any of that, but great to be here, guys.
So, as Jared mentioned, you've worked with some legends like Stan Druckenmiller, Louis Bacon, Paul Tudor Jones. We know some stories that you've shared, like the South African Rand short by Moore Capital. And which lessons did you learn from watching the trading of these legends firsthand?
The first thing I really learned was how they construct a macro thesis and then execute it. Because I'd see all of their trades and I'd speak to the FX guys or I'd speak to the metals guys or whatever. And you can see that they have a view of what's happening, like the Asian crisis. They started in FX because that's where the epicenter of it was. But then they started placing other bets, thinking, well, if these economies are slowing down, then commodities are slowing down. So they'll be shorting copper. And then they'll be saying, well, the banks are going to get into trouble because they've lent to these Asian countries. So then they start shorting the banks. And, it's how they look at global macro as this 3D jigsaw puzzle that's ever changing. That, to me, is what I really learned from these guys. And I would see it in real time. I would see Paul Tudor Jones, who was, even though he'd have a macro framework, he was actually a short-term trader. And he'd trade against his framework. And I would see all the time, because I'd speak to him almost every day, is how he puts on a position, when he puts on a position, what he's looking for. Most of it, 99% of what he did was just based on technical analysis, which was amazing. I also learned from, I think, Louis Bacon, and there's that podcast, I think it's My Life in 4 Trades, where we talk about more capital. And Louis Bacon overall, I thought was the best that I ever saw. His ability to join the dots 3 or 4 steps into the future in seconds was like, I have no idea how he can process information that fast. So it was a real privilege to speak to these kind of people and see what they do.
What sort of impact does that have on you and your journey? I mean, being able to be around brilliant minds who see that far in advance, I assume you pick up, you're able to craft it into your own kind of mental model. And then having done that early on, like how does that affect where you are now and kind of all the different levers to pull for Web3?
So I realized that the best global macro people live in the future. And you basically, and George Soros wrote a lot about this, where he would basically live in the future and then look at the probabilistic outcomes from where we are today to get to that point, and would trade those. And that's what I learned. To jump 3 or 4 steps ahead, you have to kind of live there and work backwards and say, which path is it coming? Is it going to happen or not? It's a kind of weird way of looking at things. And I found I could distill a lot of it down to a chart first. And I learned that from Paul and Stan. He was a big chart guy. In fact, a lot of them were. So I could get most of these guys, when I was a salesman, into a trade just by showing them a chart. So there was a chart of the European telcos back in the late 90s. And this is when they issued 3G licenses and the UK auctioned them off. And it almost bankrupt the telcos because they paid so much money for this 3G license. And I had seen this chart pattern developing that looked like this huge head and shoulders top. And I was showing it to Paul and to Lewis and others. And Lewis had figured it out immediately, well before I understood what was going on. He's like, well, every European country wants the tax revenue or the revenue of selling off these 3G licenses. They're all going to auction them, and it's going to pretty much bankrupt the entire telco industry. And he shorted the whole lot. But it was all in that chart, and Paul followed suit. And he's not really a sector trader, but A, he's friends with Lewis, but B, he could see from the chart, and the chart was telling a story. So that chart was saying, okay, in the future, it looks like these stocks are going to fall massively. And then you can come back and find the story of why. And that I find super useful.
So many questions that stem from that. I'm super curious, but it's actually perfect segue into our next question. But in the question really pertains to holding two competing thoughts. When we were doing our research, there was a really interesting, I'll call it, debate that you had with Peter Schiff on impact theory, and you mentioned about holding two competing thoughts, and you're really challenging Peter in a constructive way, in respectful fashion, about your ability to like frame, the physical and digital world. We're obviously in a kind of like that transitory moment, and kind of based on what you just said about observing and looking into the future, is that kind of the mental construct there? Or like, given your resume, I guess the question for me is like, given your resume, like that you just rattled off, and having these like incredible people to work with, like how much of like that has contributed to some of your success about holding these two competing thoughts? And is it like natural, or is this something that you learned from some of the greats?
It's something that I've learned. And when I don't hold competing thoughts is when I get myself into trouble. Because now it becomes this, you often become a justice warrior. You want the world to be so. And you look at everything through that frame and you get yourself in a huge mess. What you need to do is say, I think it's this way. This is my supporting evidence. But I also understand there could be other things here that I'm not understanding that may change the probabilities. Remember that George Soros idea of the changing probabilities? That's exactly what you've got to do at all stages. With crypto, and I'll go through my crypto journey in a bit, but the crypto question is, and I asked Peter Schiff this, is the world going to be more digital tomorrow than it is today? If the answer is that, then the probabilistic outcome is this space is going to continue to see adoption. Right, it's pretty simple. My crypto journey actually came back from the financial crisis of 2008 and the European sovereign crisis when I was living in Spain. I thought we were going to lose the banks over the weekend, and the ECB actually forced a bailout of the banking system. And the Spaniards, being a proud nation, didn't want it, but they took it in the end. They were forced to. I was buying a generator and tin food. I thought we were going to lose the banks. My parents' friends had had their money confiscated from local caixas, local banks, savings banks. People in the property industry, that was a lot because I lived in a beach town. Half of them went bankrupt. And I got to the realization that nobody owns anything in the financial system, not even the money in your bank account is yours. And when Lehman went under, they realized that there's collateral at the bottom of the system and all of this leverage on top. And so everybody's got a claim on the same thing. And so you don't own any of that either. So that made me start a journey of trying to start the world's safest bank, because I thought maybe there could be a bank that just holds treasuries. And we got stopped by the Dallas Fed, who said, this is a great idea. And we were like, thank you. And they said, but you're not going to get a license. And we said, why not? They said, because you'll take all the deposits from the banking system. And that was 2012. That's when a friend of mine, Emil Woods, who's very early in this space, told me about Bitcoin. I'd seen Bitcoin since 2010. I'm a macro guy. My job is to figure out what these things are. But by 2012, I realized that blockchain was the answer, because then we could have the recorded ownership of assets, which we didn't have. We had this weird ledger system, but everybody else had a claim on it, and you didn't know that at the time. So I saw that immediately, saw the kind of gold value of Bitcoin back then, and I wrote the first ever macro strategy piece on it. And I said back then, this is the greatest trade the world has ever seen. And it's proven out to be true.
We have a question ready for that, because that was, if I recall correctly, 2013. Bitcoin was $200 and you were valuing Bitcoin at $1 million, although the paper you discounted yourself to 100K, calling it the greatest option. And are you seeing similar optionality in the space right now?
Yes. So my working thesis now is, you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset, and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million. And what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like. And then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20.
It's mind-blowing when you put it into that perspective. It's pretty incredible.
Because people lose the wood through the trees in this space, right? It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, Once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto. And many greats of the industry have gone down the same journey. Many of them were Global Macro Investor subscribers, Dan Tapiero, Mark Yusko, a whole bunch of these people, Alan Howard. You know, they've all gone down this path of, fuck it, there is no other asset that matters. This is the greatest macro opportunity of all time. So why even focus on anything else? It takes a while for people to get this. And what I keep trying to do is get people to say, okay, I love gold right now. Okay, great. Divide it by the Bitcoin chart. You know, I love oil right now. Great. Divide it by the Bitcoin chart. And our job really is to maximize our returns. You know, we're trying to look after our future selves here. So as an investor, you've got to take the optimal asset. Now, everything is correlated. Even crypto is part of the same cycle as technology stocks. You know, most equity markets, commodity markets are just lagging. It's all the same bloody cycle. So you don't need to choose one asset. Everything else is just suboptimal returns.
100%. And so talking about the biggest macro opportunity we've ever seen, and you say, as Jared was mentioning in the intro, don't fuck this up, how people should approach crypto?
Firstly, decide what your time horizon is. It's the single most important thing. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wen Squiggles, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their fucking minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again. This is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not fuck up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. You know, I've got positions in dog whiff, hat and bonk and, you know, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, you know, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to fuck this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risk. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it.
And one last follow-up in this topic, sometimes you mentioned to cash out some lifestyle chips. What do you consider? What signs, indicators should we be paying attention to?
Look, why are we all in this game? Why are we all investing? Why are we not sleeping at night in the bear markets or the bull markets? In fact, we never sleep. Why are we all completely exhausted? It's because this is the opportunity and we all know it. And so why are we doing that? It's really for lifestyle. It's our future lifestyle or our present lifestyle. Because if not, that's a weird thing to do to yourself, the amount of pain you have to take to do this. So normally it's for lifestyle. So what people regret is saying, I could have paid off my house last cycle, but I didn't. Now, I also get that you don't want to take all of your chips off the table, your tokens. So have goals that are achievable lifestyle-wise that you may end up parting with 50%. If it makes a big difference to your life, that's a bank. Your lifestyle is the bank. Right, if you have a non-mortgage house, and my first non-mortgage house was in Gandia in Spain, which I bought for £150,000 back then. It changed my life. I was working at Goldman. I was living in London, had a fancy apartment in London, all of this stuff, but I had a mortgage on it. It changed my life because suddenly I thought, if everything goes wrong, I'm okay. So that lifestyle chip is what you do. And you can, as you go, you can, make different lifestyle decisions. But that's really important to do because you can't live with the regret of I could have gone on that round the world trip with my boyfriend, girlfriend, wife, whatever, and it would have had the opportunity and I didn't do it. You've got to do those things.
I think that you're saying two really astute points, which is like have a long enough time horizon, right? Because just because your dog with hat is going up in this week doesn't, or like the last 3 months for WIF have been like insanely like mind melting. But like I mean, you talk about these annualized returns for the premier assets that are just compounding. I think on a long enough timeline, those compounds turn into like ridiculous. I mean, Nifty and I talk about this frequently off camera, but it sounds weird to say this, but if you can take your nest egg and 5x it every cycle, which in traditional markets sounds crazy, but like a 5x, 2-3 times ends up being like really, so if you have the discipline, right?
I'll give you the specific example. So I bought Bitcoin at 200 in 2013. It went up to 1,000. Then it collapsed 87%. But I had a long-term time horizon. I'm like, fine, it's an option, whatever. I didn't put a huge position on, but it was decent enough. And I just didn't look at it for a while. I followed it, but I didn't worry about the P&L because it's like the bet goes on over time. It's an option. And eventually I sold out mistakenly in 2017 when things were starting to get crazy. I was up 10, 12x and it was 2,500. They had the Bitcoin forking wars. I didn't really understand what was going on. And I wanted to be clever, overly clever. So I took profits. I thought, yeah, I'm clearly George Soros. I've just made a 10x, and wonderful. It went up another 10x in the next 6 months. I mean, people don't remember 2017. They're still scarred by the last cycle, but 2017 was wild what happened at the end of that cycle. So, it went from 2,000 to 20,000, then fell 85% again. And I didn't get back in until that sell-off after COVID. That was my signal, and I got back in. Traded well, bought the down 50% period, everything else in it, locked and loaded, massively got a much bigger position than I did the first time around, and have been in ever since. I went back, and I should never have done this. I went back and said, I wonder if I just kept my original position and did nothing. I'd have done 5 times better. And then I thought, okay, what happens if I did what I was supposed to do, which was, let's say, double that original bet that wasn't so big that you couldn't do that. Just double that, just add that same amount in within 40% of the low. So you're giving yourself tons. I'm not saying, you're going to catch the low, but you got 40% wiggle room to somewhere get around the low. So that's dollar cost averaging around in a bear market. I'd have done 25 times better, because that's compounding. And that was a stark lesson to me.
And I appreciate you sharing this story, because I think that's very astute for any of the listeners is, again, that long-term mindset, don't fuck it up, like have a plan, execute it. And one of the things I've always appreciated about you and RealVision has been the data, right? Like you got Julian behind the scenes, like doing some really amazing work, but pulling all that together. And as you shared earlier, like charts don't lie, right? Like it's some undeniable truth, and being able to contextualize all that, it's a really impressive feat that you've done. And that story in and of itself should convince people to, just buckle up, ride it out, because on a long enough timeline, it makes a ton of sense.
Yeah, unless you can say the world is not going to get more digital, or something is going to break this trend over the long run.
And I appreciate you sharing the curve to 4 billion users by 2030, because you've often stated like 20 you can't see past 2030, right? And that, pulling all the data pieces together, it shows that the adoption on that curve might be coming to I'll call it a less steep rate of adoption.
That's right, because the journey from 4 billion to 6 billion, yes, it's 2 billion people, but it's only a 50% increase.
Exactly. Relatively speaking, it's a lot less steep, which that also means a lot more stability in things, and it's the validation that a lot of people require.
But it's kind of been all de-risked now. We've had regulation, we've had blah, blah, blah. It's all de-risked. So that's why this moment in time should bring everybody in. Because it's not the same space it was in 2017.
Yeah. Did you ever try to use like My Ether wallet and some of the really early wallets like that were like crazy clunky? Oh my God. In 2016, trying to get some of these ICO tokens was an absolute nightmare. I mean, these wallets were like clunky as a compliment to what it was. So everybody complains about MetaMask, and I'm like, dude, you have no idea. This is like godsend relative to where it was.
I was so lucky because when I got in, Emil Woods and Chad Cascarella, who went on to found Paxos, had built an exchange called ItBit. And so they're like, oh, just sign on for the exchange and do that. And it was like, oh my God, they took, so I had none of the Mt. Gox issues. I had nothing else. These guys were ex-Goldman, kind of world-class. And so I didn't do any of the ICOs, luckily. Well, luckily, some people made a lot of money as well, but I didn't. But I had, ItBit, and it was just an easy solution for me, and that was it.
Yeah, I have a couple wallets with that scrap metal, as you like to say. But so we talking about crypto and how it all rolls up. But one of the things that you've stated publicly that resonated deeply with me is you said that you think art is the very top of the pyramid, and NFTs aren't just part of the crypto world, but particularly the fine art. They're the top of the pyramid. And in the end, the wealth goes into the art market, just like the traditional world. in a world whose like attention right now, as we talked about, is like captured with meme coins and you know what a a mind-blowingly bold observation and statement I think that is. But you're obviously voting with your capital, right? And we'll touch on that a little bit later by what you're acquiring. But for now, why do you think NFTs are the top of the pyramid? And we've been talking about timeline. What's that timeline that you recommend for these assets?
It's again this living in the future thing. So if you think I'm vaguely right that this space is 50 trillion, 100 trillion, whatever the number is, and that this is a massive wealth accumulation, okay, let's spend a little bit of time in that world. What does that look like? Well, that's somewhere around 2030, maybe a bit beyond it. AI is building businesses. AI is destroying businesses. We don't know how economies work when you can have infinite humans via the robots and the AI. We don't know how anything works. How do governments fund themselves? How do economies work if they can grow 100% a year? How does any of this work? So that's been in the back of my mind. So this is this 2030 in the future. Now, if I look at crypto, I'm like, okay, so then we're going to have a ton of very wealthy people. There's people going to make an obscene amount of money in this space. What are they going to do with that money? That's a really interesting question, because most people in this space will not go back to TradFi. Particularly if AI is disrupting every business around. What does the S&P mean? When you've got AGI, how do you invest in the S&P or the stock market? Does it just grow with GDP? How does it work? I don't know. So I'm like, well, most people will buy a property. So, there'll be all of these future billionaires from the space. Let's use Mike Novogratz, great example. What does Mike do? Buys himself some nice houses and, and all of that stuff, right? So he's made a large part of his wealth in this space now. Dan Moorhead, the same. They all kind of do the same thing. But what I also know to be true is that this is an incredible moment in time. This is a time none of us ever forget. And from maybe even for many from 2013 onwards, or 12 or 10 for some, but really the whole COVID moment where everybody's hyper-focused on this one thing and a lot of people suddenly got it, was a moment in time that's been magical. It sucked in so many people out of different industries. You guys are out of different industries. I'm out of different industries, all here now. So this matters to us. We're on the internet all day on crypto Twitter, and we're watching the world play out in front of us. And it's cultural. It's a cultural moment. And then we see this culture being celebrated truly by some of the artists in the space. And so I know that when people become rich, properly rich, they want to hang on to the memories of the time of their youth or the time when things were special. This is actually why Warhol is so valuable. It's a capsule of time from the 60s and the 70s. And that matters massively to the baby boomer generation. Much like to my generation, it would be Damien Hirst, Banksy, and Basquiat. And to other generations, others. Some survive through the generations, Picasso. Others don't, and they just become less valuable. So I also observed that when the hedge fund managers, the industry I was in, became the richest people in the world, the Stevie Cohens, the Ken Griffins, all of these guys, what did they do? Well, they bought all the fancy property, right? They've all got ridiculous property, but they all now own the art. Billions and billions and billions of dollars of art. Why? Because there's a limit to the number of properties you can have. But art has been a great store of value forever, the top art. And you can flex with it to show to your billionaire friends how rich you are. And it's an intellectual thing of collecting it, and it's nice. You feel like you've got a purpose. So that's always been the case. When China opened up after the WTO, a bunch of Chinese got really wealthy. What do? by all the high-end property and all of the art market. When India exploded back onto the scene, Indians, property market, high-end art. Russians, property market, high-end art, right? It's like it's in front of our eyes. It's the same what happened in the 1920s, the Gilded Age, property market, high-end art. So I'm like, well, we know the trade. It's high-end art. It's so obvious. Now, what is so magical about this period in time is there's about 6 people who are the OGs that matter. And we know them all. They're 1 degree of separation. They're friends of ours. And I'm like, okay, this is special, right? So they're 1 degree of separation from everybody. There are, and I'll split it between the cultural artists and the generative artists. The generative artists have appealed in the art history sense of art. This is an important movement. And the cultural artists are like, okay, this is Warhol, right? This is a magnificent moment in time. And there's only 6 of them. And that's it. So on the cultural side, there are only 2 that matter. The first is Xcopy. He was already a big digital artist. He was one of the first to create NFTs. He went through the struggle, then became absolutely massive because he was commenting on the culture and humanity in this sort of graffiti art style, but made his own via glitch, what digital enabled. You know, it's like a digital version of Basquiat meets Banksy. And nailed it because even the titles of his work, they've got that English wryness to them. It's like, the fuck are you looking at? That's typically a guy in a pub who's had too many beers, who's aggressive to you. And his subtitle is just twat, which is an English description of what you think about the guy. I mean, it's just brilliant. Beeple, you know, you can't say enough good things. That guy every day drops a time capsule of what happened today on the internet. And he's done it every single day.
Yeah, your Journeyman episode with Beeple was mind-blowing about how you're able to really unearth his story and share with the world just how committed he was to the art and like the process. It really opened my eyes up to like just it's not just a bunch of, you know, dick pics, but it's the social commentary, the practice, and it's
when I asked him, it's like why so many dick pics? He's like, this is the internet. He's like, the internet always goes down to a dick pic in the end. And I was like, oh, so he's not just doing it for shock. He's actually trying to comment on what the internet actually goes down to. When you distill it down to its finest things, it's all of this story with some ridiculous meme attached and then some outrage. And he captures that so well. So those are those 2 artists. And on the other side, it was autoglyphs first. Then, whether it's Tyler Hobbs or whether it's Snowfro or whether it's Dimitri with Ringers, it's basically it's like there's 3 or 4 artists that matter. And then there's CryptoPunks. That's it. That's the beginning. Everything else is a derivative. Yes, Rafiq, something new. Okay, that's something to monitor. There's not much else new. Yes, there's some photographic stuff, which is why I've started collecting Rupa.
Well, your Liwas, like you're very open about Liwas, and Rope is incredible in that genre defining moment. I've appreciated you collecting and going outside that curve.
Well, I just saw that and I thought, this is new. This is like the memorabilia of the past, the golden memory of people had of the 50s, 60s, and 70s, but warped for the reality of today. And it's kind of also like AI is new. It's just been born. It's trying to make sense of the world. And this is how it made sense of it, because it kind of hasn't quite figured it out. And I'm like, okay, we're seeing the perspective of the world through the AI, but we're also seeing the dystopian kind of Huntress Thompson death of the American dream, when it was supposed to be the American dream. And it's something that we feel is pervasive in society anyway, that it kind of didn't work out how we thought it would be. So I just saw that immediately. I just love I love the photography of that era anyway. And then to see it warp like this, I just thought this is brilliant.
His work is oddly relatable. It's incredibly engaging. It's familiar, but so you have Oliwa, you have your X copy and Peoples. I gotta ask, when Squiggles?
I've not bought any Squiggles yet. I think I've really just been focused. I've not focused on any of the generative stuff, to be honest. I've found generally the larger collectors are in that space.
Well, you mentioned Alan Howard, who's kind of gone, bananas in a good way, acquiring a lot of grails. You're close to 6529, who, is really on a mission to hoard all of the grails within generative art. So
Yeah, so Alan 6529, there's Canvas, which is just launched as well. I know who that is as well. And they are all tending to focus on the generative side. And so I've tended to focus on where they don't focus. Because Alan is a lot richer than I am. And he's a better trader than me. So, because I've known him for 20, 25 years. And also, generally, the cultural stuff appeals to me. My cultural references are David Bowie or Hunter S. Thompson. These are cultural moments in time. Damien Hirst matters to me because I was in the 90s in London when Blur and Oasis ruled everything. Ibiza was house music and clubs, and that was English DJs. We had Damien Hirst, Tracy Emin, Banksy as our artists, and everybody was in London. It was the greatest place on earth, and we all remember that, and we will do forever. And so it's all the storytelling of this stuff.
and that's the beautiful part of, right? Like, is you're able to collect what you like and go around it, which is actually perfect because Nifty and I are huge watch collectors or admirers, and we've noticed that you have I won't say a huge collection, but you've had some really nice stuff on your wrist, whether it's the Platona or some Cartier. Like, would you say that collecting has been part of your life, and has that influenced any of kind of your observations in collecting in, I'll call it, the digital art world?
I'm not really a massive collector. Music, when you could collect music, now it's like, just add it to just playlist. But, around me, it's like thousands of CDs from old, and then I got a bunch of vinyl and, all of that stuff.
Who collects CDs? I mean,
But I can't get rid of them anymore. So they're just here, and they're just a memory of the past for me now. So, I have collected bits and pieces, but I'm not really a collector in that respect. So I don't know why this has appealed to me so much. But I am a collector of, if I'm a collector of anything, I'm a collector of cultural moments. I was at Live Aid, 1985. That was one of the most famous concerts of all time. It was a moment in time. I like music events. I like things that have a reference, and I like, if I collect anything, it's life experiences.
And that's a perfect segue. We have a few minutes left, and we have some rapid fire questions. The answers don't need to be rapid fire. First one is, you've mentioned that your best trade is always in quality of life, building for around your lifestyle and not around money. What lessons, tips can you share in that regard?
You need to decide what makes you happy. What do you feel like in the future? Again, this is this whole future thing. What do you want to feel like in the future? And so for me, it was like, I want to feel like I had two dreams in my life. One was the Mediterranean and one was a tropical beach. And if I even think now, I want to be on a tropical beach and I want to be in a pair of shorts and I want it to be sunny. Okay, so you can either do that build a beautiful house in Little Cayman, or you can be super rich and be in some bahts, or you can buy a shack in Nicaragua. Right? So therefore, it's not the money that creates that experience, that warm smell, the salty air, the turquoise sea. Doesn't have to be money. That's the learning, because I've done this. The Mediterranean trade started for me from a house in Gandia. which for anybody knows is like a kind of touristy town on the Valencian coast of Spain. Nothing special. But to me, I got the smell of the orange blossoms. I had the view of the Mediterranean mountains. I couldn't see the sea from my house, surrounded by almond groves and orange groves. I had that amazing air that scents in Spain. It's like this pine smell. I had the culture and the food and the music around me from it. I'd won everything. After that, yes, I'd earned some more money, so I was able to find a nicer house. But it was actually the cheap house that won the trade. So you got to realize it's not about the money; it's about how do you feel.
I love that. And by the way, Gandia has one of the most beautiful and walkable beaches that I've seen, and those are really, really special.
Yeah, huge beach, huge beach.
So, one more. You are really interested in health and longevity. Any hack, gadget, change in your routine that you've incorporated recently?
Not recently, and I'm inconsistent with all of this. The big hack for me was a low carb or ketogenic diet. It just helps you with your weight. I find to just feel better. You just feel, you actually realize that once you eat a lot of bread and stuff and yeast and stuff, it actually, for most humans, it actually doesn't make you feel great. So I found that was a really big thing. So even if I'm not always keto, I will always go back to that. If you've been, on holiday, you've eaten too much on a business trip, everything else, you're just feeling a bit crap. Just a few days of low carb and you start to feel a lot better, have more energy. That was one. The other one for me has been, two others. One has been yoga, which I've always done a bit of. I'm half Indian, so it's kind of culturally a thing, even though my dad never really did it. But I used to go to India all the time and we'd end up doing yoga and stuff. But over the pandemic, a friend of mine who lived in Spain, we just do it over Zoom. She's a yoga instructor. And I've just continued to do that since March 2020. And I found that's great because you have more movement, gives you strength in different ways. It just, again, makes you feel good. And the other thing is I try and do, which I don't do enough of, is walking outside. Luckily I'm in Grand Cayman, my house in Grand Cayman today, so I'm not on the beach here, but it's just down the road. So I just walk 3 minutes down the road where it cuts into a beautiful beach, and there's like a mile, 2 miles of a beach to walk. So I just before I came on this call, I'd gone for a beautiful walk down the beach, come back, you're so grounded. So that changes your quality of life, clears your head, is meditation. It's really amazing. Yoga is meditation. You can't think of much else. But it makes you feel, both of them make you feel better walking doesn't require a lot of effort. Yoga's actually quite hard. And the ketogenic diet just makes you, not gain weight, as everybody does when they get older, but also just feel less crap about yourself. When you've eaten junk. You just know. I mean, I don't, and since I, lived in Spain, I just never eaten processed foods, really. I cook everything. But this one hack, that was a huge change.
Yeah, the keto thing for me has been, I say I have keto tendencies. What it does for me is it's created the discipline to kind of say no to, I say I'm on a war on sugar. Like I just don't eat sugar. But the carbs thing is it gave me a really good set of rules to not necessarily be a diet, but do like a lifestyle, right? Like it's just gives you, it almost, at least for me, it empowered me to kind of say no to the bread and allow me to have that moment. So I agree.
Yeah, and if you do the same with the kind of seed oil thing of, just don't eat the potato chips because they're all cooked in crap. We don't have the benefit of Spanish potato chips cooked in extra virgin olive oil. It's like, just avoid the crap. Just avoid the processed crap. Avoid too much processed carbohydrates. Life is fine.
Yeah, it's amazing. It becomes surprisingly easier in your older age. I just crested 40 to be able to maintain that.
Yeah.
Now, one of the things, like,
and your future self will thank you for it.
Amen to that. You're right. You're mobile. Like your joints are gonna be a hell of a lot better. It makes a ton of sense, right? You talked about this, that we're in this special moment of time, and it's probably not going to be repeated, at least in the foreseeable lifetime that we have. And you mentioned in 10 years, the space is going to be too big. And we talked about the 1 degree of separation right now, but people will be impossible to connect with, right? So what advice do you have to any of the listeners out there to connect more in these special times?
Yeah, because, in the future, it's going to be part of the financial system. There's going to be, 1 billion people involved in it. We're just going to lose this magic. And you never think you're going to lose it, but it will be gone. So make use of it. For me, it's been, just being an active part of it, talking to people, having some fun with people on the internet itself. But also just, once or twice, I like to go to maybe 2 or 3 events in a year just to go and meet people and share some good times and a glass of wine. I'll try and choose one crypto event, 1 or 2 NFT events, and just go there and absorb it. I mean, I never forget, I was at Ian Rogers' apartment in Paris, Ian Rogers from Ledger, and I was sitting with OV fuck render, OSF fuck render, somebody in the music business, technologist, finance person, blah, 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 around a table in this beautiful old Parisian apartment. And I'm like, this is special because you never get all of these people around a dinner table with a commonality of interest. And here it was. And everybody was big grins on their faces. Even we were in a bear market, but everyone was just loving it. You could see all of culture coming together in one point. I'm like, wow, this is special. And I keep seeing this.
Similar special vibe comes to mind, Marfa. I highly recommend that event. Is really difficult to get to, but then all makes sense. So
yeah, I've not been. Everybody's raved about it, but I've just not had the time this year because I've suddenly started going to a lot of events, so I need to slow that down.
Yeah, it was Marfa 2022 that gave me the same moment that you speak of, where it's just so many people from different walks of life, all just there for one common thing is of the being the art appreciator. It's one thing that I agree with you is magical about this space. If you have one book to recommend, what would you recommend for max value to the reader or to the listener?
Oh God, that's such a hard question. Max value. I would probably go with Homo Deus, like Noah Harari. Sapiens was a great book, and there's a lot of great books to recommend, but this one gets you into the future. And it gets you to understand where the hell we are about to go. And you can discount any of what he says, but you can't discount that we're going somewhere there. And the more we're all aware of it, the more we'll realize that we can make a lot of money from investing in this. We don't have to fear it if we're involved in it. You see people fear the crypto space. They're usually because they're not involved. Get involved. See where technology is going to go. You can fight it all you want. You can angrily shake your fist at the clouds. It's not going to stop. So to process it and allow yourself to process it early is very powerful. It'll help you navigate what you do with your business, what you do with your life. People who have kids, how to think about it. And it's uncomfortable reading, but it's very useful. So yeah, I would say Homo Deus.
That's awesome. You have to have that discomfort for growth most of the time, right?
Yeah.
So it's a good recommendation. I have not read it, so I'm actually going to pick it up. Part of this podcast has been awesome to get book recommendations. I've been a more avid reader when we're able to connect with such brilliant minds. So I will say, in the interest of time, we don't want to keep you for too much longer. You've been extremely generous with your time. Do you have any closing remarks or anything you'd like to share with the listenership?
Yeah, look, you've kindly mentioned RealVision a few times. It's really there to help everybody in this journey, right? The whole "don't fuck this up" thing is serious. I know it's a bit of fun, but it's actually serious. And we've got there's a special link for you guys, which is realvision.com/SquiggleDAO. Go there. It's free to join. There's a great macro piece when you sign up. There's a great macro piece for myself and Julian Bittle to explain the whole macro landscape and how to think about it. So I think people find that really useful. And then there's a lot on that platform. It's not just content, it's a whole platform experience. So realvision.com/SquiggleDAO. Go and do that. Find me on Twitter, obviously. I'm always around and I try and engage as much as possible at Raoul GMI. And I'll leave it with the simple thing is, look, this is the biggest gift of an opportunity you've ever been given. That's this crypto opportunity. And it is really serious not to fuck it up, because really we have about 6 years before we get into this weird world of which we don't understand. We've got a 6-year period to make as much money as we can to protect ourselves. But don't take it too seriously. There is art that is part of the culture, and be involved in that too, because art has longevity beyond just the accumulation of money. And so, I like the duality of, being a hardcore crypto investor, but also appreciating the cultural moment and the art that creates it.
And you're generous enough to say that there's free content. I also say, on behalf of being a pro crypto, member from the start, there's different tiers to RealVision. So it's everything from free content all the way up to huge institutional, costs. But anybody who's interested, please look into the different tiers, because I will say that the cost is really minimal relative to the quality of content. I mean, you have, I can't advocate for it enough, but like, you have amazing library of professionals, the traders. I mean, the most brilliant of minds you've been able to aggregate into one platform. And
I don't think there's any other platform in the world that's had Stan Druckenmiller and Beeple on.
Yeah. True. And then you go, like, I don't know, like I remember just going through a bunch of different videos on charting and macro opinions. It's really, really extensive, and you can get lost in the content for hours. So I can't advocate. You're generous with the free content. Gave away Solana when it was like $20, which was incredible. That if anybody would have just listened, but beyond that, there's a lot more behind the gated stuff. So anyways, as you mentioned, follow Raoul on Twitter. He mentioned it. It's Raoul, Raoul GMI, for a global macro investor. And follow SquiggleDAO. Like and repost this content. Hop on the link that Raoul just shared to show your support for RealVision and for the SquiggleDAO. If you found any of this valuable, please feel free to propagate this content as much as you want.
Yeah, and I'm also want to appreciate what you guys are doing. I think it's a great idea. I think not only are you curating and collecting and supporting a space, but you're also connecting. The magic of NFTs is you're creating a community around it as well. So your NFT holders are actually the magic within this. And so what you've done is really good. Also, as this stuff becomes much more expensive in the future, you'll allow people to participate in that maybe couldn't afford to buy their own squiggles. So I think it's important. I think it's important and wonderful what you guys have done.
Really appreciate it.
Yeah, it means a ton. Thank you, Raoul, for your time. You've been beyond gracious with all of your knowledge and for sharing all of the stories. Thank you so much for your perspective. And as much as we're knee deep in the rabbit hole of generative art, holding that two competing thoughts to aggregate that of your cultural relevance within the digital art space has actually helped me see things from a different perspective and make me realize I have underexposure to Beeple. So thank you for that moment.
All right.
Thank you, Raoul.
Thanks, guys. Really appreciate it.
Thanks for listening to the SquiggleDAO podcast, which has been brought to you by Nifty. Nifty is the pioneer of the entire NFT lending market. Their platform has the deepest liquidity, which usually means you can get the best terms. They also have no auto-liquidation risk. As long as you repay the loan before maturity, you get your asset back. Get more flexibility on your finances, take advantage of any opportunities, and make your NFTs work for you. Nifty has done over $500 million in total loan volume since launching in 2020 and has had over 60,000 loans with zero security incidents. Head to nifty.com and try lending today.
The information provided in this podcast is for general informational purposes only and should not be considered as professional or financial advice. The hosts and guests are not licensed financial advisors, accountants, or lawyers. The content is based on personal experiences, opinions, and research, and its accuracy, completeness, and timeliness cannot be guaranteed.